Hi everybody, it's Victor here from Trend Following Trading for Beginners, and in today's episode I want to talk about some of the causes of trading frustration and offer some of my remedies to address the issue. Coming up next. Happy Valentine's Day everybody, and sorry I have been late for the last couple of days. Just started a new job and lots of things to catch up. And as I said on my podcast, being a father of 4 kids, there's a lot of things going on in my life, and just has been very busy. But anyway, here's the podcast for this week. Today I want to talk about really trading frustration. Mainly it's brought up over the last weekend really. We got the gale force here in UK. It's about the wind and stuff, and we sit down in one of the guys' house talking about things because couldn't really go out. Just so much wind. And then we obviously talk about football and trading and all sorts of things. And one of the things came up with trading was how frustrating things have been for the past 2 months basically. Ever since the start of 2020, so many things happens. Gold going straight up and come back down again. So it's oil prices going straight back down and fluctuation everywhere. And you got the impeachment happening, and then the in US, and the trade seems to be the US trade market seems to just go up and up. And even though China is suffering a huge problem with the coronavirus. And I've moaned about a couple of things previously, a couple of podcasts before and weekly updates. And American index seems to just shove it off as if nothing happens, still saying, hey, still dancing, everybody's still, playing along, no problem. But the us half the world away, it's a lot of panicking going on, those kind of things. And then basically a lot of traders, some of my friends have certain expectation, and then the market don't seems to fulfill those expectations, just going the other way, like the US market, so to speak. And gold was expecting to go through the roof with the virus running around in Asia, and no, it didn't. And then the oil price came down as expected, but it's gone down a lot more. And some of my friends tried to do, bottom picking and just couldn't pick it. Just continued to stay low, and frustrating a lot. So all of this brought down to this episode basically is trading frustration. What causes trading frustration, and what you should do about it, or how is there anything you can do about it? I mean, to me this is a very big topic for me because I suffer from it a lot. Being Hong Kong Chinese, we like to, it's bred into me basically. We just like to trade anything, so long as we can make money, we trade. We trade stamps, we trade shoes, we trade toys, hi-fi, whatever that makes money, so to speak. And sometimes you make money, a lot of time you don't. And just those certain expectations and things, that's the type of things that are bred into me. And then trading is just a manifestation of it. And a lot of times I found it's because I thought that certain things will happen, and it didn't happen. And anything that I really sure of, and I really put all my pocket money into it, so to speak, and just didn't happen, and go the other way around and then lose me loads of money. That sort of things, it's sort of been with me since my childhood, and trading just manifests itself. So sometimes I make a bit of money trading things when I was young, when I was a kid, but that attitude brought up. Bring along with when you adulthood into trading, and then it just get worse because money is a very emotional subject. And also being Chinese, Asians in general, we link success to making money. Failure means you're losing money. That kind of thing. It's quite a big topic for us, and then it's kind of culture in Asia as well. It's the same similar thing in Europe, in the West, but I think it's a lot more. As being a Chinese, I really feel it in my blood, so to speak. And this kind of frustration, especially when you bring your life, how you bought up and things into trading, just manifest yourself. So you go in, you expect, let's say, Google to go up, and you expect a good trading decision update, which is to come out, and then the market just go when those share price just going the other way around and then go straight back down, and then you lost a bundle. And you try to buy gold don't go anywhere you like, and then you say, oh, forget it, don't trade anything, or sit back, and then suddenly going straight up. It's just really frustrating, and so forth. And you even have a plan. A lot of time you plan to do certain things, it just didn't happen, so it takes a lot longer than is necessary, than you expected. And then finally it happens, but because it takes so long, you get so frustrated, you came out of the market, and then the price, whatever you're tracking, just goes shoom, go to the cloud, and it goes through the moon, and then you're not there. You're watching on the side. It's really, really frustrating. I mean, I'm sure a lot of new traders have that experience, or quite often have that, especially when you're starting out. And as I grow in my trading journey, this is one of the things I had to face, a big demon of me, big problem that I had to deal with, because I'm trading very emotionally, and I've very much a lot of biases, and also I'm not very patient, and I want more of my money quickly, just like anybody else, and my expectation is skewed, and market is being market, just do its things, and sometimes it works in your favor, sometimes it's not, and whenever time it is not, you're just bang your head against the wall, and inevitably it lead to blowing up your accounts and all sorts of things. But one of the main causes is trading frustration, in the sense that my trading expectation is wrong, and that causes lots of frustration, not just physically, you're losing money, but also emotionally, make you lack of sleep. You get irritated with other people easily, and you lack confidence in your trading systems, and you sort of like give up after a while, which a lot of new traders have to go through. But as you grow into your trading journey, you start to realize all this frustration is really down to my view, very much of an expectation issue. You go in. Most of us want to go into the market to make money. We didn't go into the market just try to beat the market or try to fit a puzzle kind of thing. You go into the market to make money, fair and square. But the way you make the market, make the money from the market, is, since it's full of landmines, you look at your friends, you look at social media nowadays, you go look at news media, everybody, try to make some money out of you by bombarding you with information, say, it's so easy to do Forex, it's so easy to buy and sell shares, and trade like, all those Wall Street people. You actually got films about those kind of thing. And you sit on the sideline, you just say, well, I would like to have some of that action too. I'd like to have some of those money stick in my hand and put in my pocket, and I can use it. I would like to have my own Lamborghini, etc., etc., just the same as everybody else. So, but the thing is, all these frustrations is, the media is one thing, and then the financial services is another, telling you or showing you or try to, sow the seed into you that things are supposed to be easy. But remember, I think 80%, more than I think by 85% of people, new trader loses money, because one of the main reasons for me is the expectation. The market and the media's school our brains, and so to speak, and make you think it's easy to go into the market and make money without doing homework, without have a plan, without looking after your emotional state, without even looking after you have enough sleep or not. And then basically say, yeah, put £5,000 here or $5,000, and in 12 years or 10 years, or even some people 24 months make you 1.5 million quid or something. You probably get some of those emails. And all the expectation you bring down into the market, and the market doesn't do what you think it does, you get frustrated, you lose faith, and you basically just bang your head against the wall. And most of us feel very frustrated and want to give up. Only few of us really basically look at what we have done in our trading journey, and look at our trading logs and journal, if you even have written them down, and actually think, what the hell I've done that for? Why am I doing this? Why am I not following my plan? And then you look at the charts and it doesn't make sense. It's like, why did I went in there? Why did I open a trade here? And then why didn't I wait? Why double down? Why I keep on try to catch the bottom and then not stop? Those are the kind of question. But you're doing that like afterthought, after the event, when you're sitting in your chair with a cup of tea or whatever, relaxing and thinking logically. And then all this frustration come up, double down and say, I can only wish I can do this better. And then when you go into trading, because you didn't plan, to cover those problematic issues, you continue with those kind of problems. And then it just kind of frustrating yourself and again until you're banging your head against the wall enough time to say, stop banging, stop digging, and find out what hell's going on. And that's the part of the journey that any trader, as far as I'm concerned, that want to grow, want to become better themselves, will have to ask themselves, And to me, some of those things that I basically, like I said before, to actually reduce the frustration is the expectation that I should go into market with no expectation at all. I mean, we all go in the market to make money, right? But sometimes we have skewed thinking. We go in the market and make millions within seconds or weeks or months, whatever your time frame is, and make it so easy. And but the problem is the market is going to do its things. You never know where it's going, and you never know which share is going up or which share is going down, or which index or forex or commodities, whatever it is. You might have a bias field. The market is not going to do what you want to do, and it basically comes down to the very fundamental basic question: what are you going to do about it? And how can I do something to reduce the frustration? To me, frustration, expectation, blah, 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 they're all emotion. We have certain emotion, have certain energy. Those energy and emotion are misplaced. Now, how can I make that emotion, energy to place them in a proper manner and to set up, therefore, a better expectation and therefore reduce frustration? And that's basically the topics I want to talk about today. I mean, first off the bat, for me anyway, is first of all, ask yourself this basic question: why you want to go into the market? You go into the market to supplement your income, to make something on the side so you can buy a better car, live in a better place, or just go on holiday or something. All our own views are different on this subject, but basically it's more or less just try to get some money from doing a different thing than your day-to-day job. But the main problem here is, for me anyway, we should think of it as a long-term project. Nobody get into any skill, let's say a chef or builder or airplane pilot or a doctor, expect to be good at the job with just reading a few books. Go on YouTube, watch some video, or buy a DVD training series, and then you're supposed to be great at it. No, you can't. You will not be able to perform at the level that you think those top performers are performing and making those extraordinary money. Yeah. So you want those extraordinary money, you need to work. You need to train your skill, put your skill, to the next level, get it really top notch. And while you're doing that, you're not going to think about the money. You think about how you can improve your skill, and then slowly and surely your skill get better, and therefore indirectly your income gets better as well. That kind of thing. So first of all is give yourself time, learn trading. If it's something that you really want to do, after you have killed I don't know how many accounts. For me, I've blocked like 3-4 accounts, and tens and thousands of pounds before I can start thinking, because I was very much in gambling mode. Again, it's in my blood. It's very Asian kind of thing, just like gamble. But then I sit down and think, how can I do better? There's an opportunity here to make my life much better, and I don't have to worry about relying on any company to give me a job. And if I get made redundant, at least I got something on the side here that can give me an income. Those kind of things, I think, is very similar to a lot of the people. But first off the bat, basically, is really take a long-term view. My long-term view is 10, 15, 20 years. I trade. To me, I think minimum had to have 5 years when it's a new trader. Basically trade and learn about the skill, get your skill up to speed to be a certain level, then you can expect certain type of income. You don't expect yourself making loads of money right at the start, so to speak. Those basketball player, football player, snooker player, tennis player, you see them making loads of money, but you don't see behind the scenes how much hard work they work on. They put hours in it, and then actually continue even though they are frustrated, If they're injured, if they don't feel like it, if they have emotional problem or financial problem, or the dog die, so to speak, they will continue and trade because that's what they want to do. Okay, so in trading you want to do that similar mindset as well. Secondly is you must have a plan. You have to follow a plan. The plan basically reduces the frustration, reduces mistake, which then indirectly reduces frustration. But the first thing first is you have the plan, and then secondly is, are you confident enough to actually follow that plan? Okay, a lot of us deviate because it's boring. The plan don't seem to be working, or it's working but it's working very slowly, not making the money that you wanted, not the amount you wanted in the time frame you wanted, and you feel very frustrated. And your friends, walking around who are doing similar trading as you, maybe a day trader making loads more money than you as a trend follower, and then you think, oh, well, maybe I should jump over there, that kind of thing, and you don't follow your plan and doing all sorts of funny things. So that has to stop. You need to have a plan, really, to actually help you to reduce those possible losses. And you only go in, I think, in the market to make money, to pick the low-hanging fruits. I think Jim Rogers actually saying that, he don't go in the market unless it's the fruit just hanging in front of him. All he does have to do is just take his hand, just pull it out from the tree. That is a type of trading that people need to do for him anyway. But that's his field, that's his way, that's his trading plan. So for us, we have to have our own trading plan, our own view, maybe biases, and it's gone into our trading plan. But we have to therefore follow that plan. And then the other thing is, while you're trading, learning to trade, you need to reduce your trading size. Don't expect to go to the moon in one step or many steps. You expect to go to the moon. Maybe go to the moon, but it is going to some distance over time. So baby step counts. Every baby step counts, so long as moving in the right direction. That means writing things down, following your plan, doing a daily routine to make sure that you check your charts, and so forth, those kind of things. Okay, and to me, basically, this action, these activities take long term. It's a habit you need to build into. It's not really just for Christmas, so to speak. It's a bit like a dog. It's for life. 15, 20 years. That kind of thing. You don't just go in and play. If you really want to just go in and play, then forget about trading. Let somebody else deal with it for you. If you can find somebody that you can trust to actually do those trading and make money for you. But ultimately, my podcast is about giving you the right attitude and mindset and the skill to actually trading for yourself. So assuming you want to trade for yourself, you want to do yourself, then you have to have a plan, take a longer term view, and then trade it slowly and reduce your trading size. The good thing with reduce trading size is, if you make money, yes, frustrating, you don't make enough, you don't make a lot, but you still making money. A lot of people have this wrong idea that making money, okay, £10, about $10 compared to 10 millions. Yes, a lot of difference, but you still forget one fact. You're making money. You didn't lose money. You more than break even. Okay, you have got $10 here in this case. 80% of people blow their account. I think about 75% of them I think between 75 to 80% people loses money. Okay, and then only like 20-25% of people break even or better. Okay, you need to think about that. What's the other side of that 20-80%? Okay, don't just snigger on, oh, you only make $10 on this trade. Crap, it's bad, it's good, no good, and compared to other people. No, your skills only enable you to make $20 or $10 at this stage, but when your skill progress is better, you will then make hundreds, thousands of pounds. Okay, but it takes time, so don't snigger on that amount. And meaning is, if you look at it this way, you're in the top 20-25% of people in the world out there trading, among the new trader, to making money. Okay, don't sneak in on that. That's a very good, thing to have. So remember this one. The other thing I just talked about, the lack of confidence on your system, is the other thing is, have you checked back test your system? Okay, using 10, 15. For me, it's minimum 10 years data. 5 years really minimum, but I think 10, 15, 20 years, that kind of thing. and I look at the patterns that comes out. How often your trading plan give you winning trades? How many of that is losing trade? How often the winning trades happen? Any cluster of it? 2 in a row, 3 in a row, 7 in a row, 5 in a row, those kind of things. So look at the same thing for losses. How often it is. 2 in a row, 10 in a row, 5 in a row, those kind of things. And look at how many losses, those kind of things. And ask yourself, okay, the good time, when you're making money, you probably can do it. You can stick with it. But ask yourselves the simple question, can you stick with the losses? Okay, a lot of us couldn't. Let's, for example, 10 losses in a row. Even you lose, 20 pounds at a pop, you lose 200 quid like that. Can you manage it emotionally? Let's screw this up to 2,000 pounds per trade for either of these losses. Can you handle that? You can, well, okay, dial it down back to $20 or 20 pounds or 20 pounds or 200 pounds or something that you're more comfortable with, and then stick with it, because this is a good thing. If your trading system actually say, okay, your trading system has an average of losses of between 5 straight in a row or 10 straight in a row, that kind of thing, and you say, okay, I can live with that, fine. This is the worst that can happen from the past history. You never know what's going to happen next in the future, but at least in the past history, if you can go back in time and live with those 10 losses in a row, which happen, oftentimes it happens, you have the emotional state to actually live with it and able to carry on and not get frustrated and stick with your system. That is important. It's not talk enough. Back testing is just testing your data. Testing your plan to do your system trade and to make sure that it's happened is to give you a positive result, so to speak. But the other thing is look at the pattern. Does it actually make you money? First thing, yeah, it does. How often does it have straight wins in a row and straight losses? And ask yourself simple question I said before: can you handle this? If you can't, dial back your trading size. So for new traders, this is important. Put your trading size small, okay? And then also this. Give you confidence that when the trading is going wrong way and it's hurting you, and 5 losses in a row, and you say, oh, my system said you can have 12 straight losses or 10 straight losses in a row. It happens before in history, back in my test data, and which I can go back and look at it and then say, okay, that's my system, that is the sort of expectation I should have. Okay, fair enough. Stick with the system. You find it easier to stick with your system when the market is going against you, when your trade is going against you. It's also give you emotional stability as well. And this is good. And also the other thing is, out of that is over trading. Okay, that means is you trade too big of a size. This is what I said before. You can sit down and think, I can put yourself emotionally think I can lose 10 in a row if I trade too big of a size and lost 2,000 pounds per on each of those losing trade. Can I handle it? If you can't, don't put that too much trade on. And that is also mean of over trading by having too big of a size that causes too big of a losses if it happens and you cannot handle it. Okay, so that is very, very important to me anyway. I find that out. It's very, very useful. And that sort of help you to reset your expectation. So initially I said expectation is the main problem. To me, yeah, it is. Take a long-term view. I was very short-term before. I'm very impatient because I have no confidence in my system, because I don't have a system to start to talk with. Now I have a system, and then I didn't do back tests enough to actually think. Like what I said, can I actually sit those through? At the start I just look at it as a data set. Yes, making money, good. But I didn't drill down to those data to get more information, like patterns and stuff. And those are things that you really need to know about. And the other thing is the market. You need to remember the market is a random event generator. If you're doing mathematics or engineering, whatever the market is going to do whatever you want to do at whenever time it wants to do. It's a collective thing of minds, of traders out there. Okay, they're going to do things, and we talk about money here. Okay, when it comes to money in Asia, my view anyway, people do anything for money. Okay, and you think everybody's got to be efficient and tell the truth when it comes to money, that kind of thing. If you have that belief, then I tell you that you're basically living a wrong world, live in the moon or Mars somewhere else. People will do anything to get money, and I'm a bit biased on that, and I have my view on this one, but I'm very skeptical if people in the trading market, that some of the big boys, conspiracy theory or not, they go to there and try to suck you in and make a hit out of you, take your money, so to speak. Legally, in this case, probably some of the illegal activity as well, but they never get caught. And that's what the SEC and all these, regulators out there for. But as people, we believe, like, as the police improve its skills, so is the robbers, they improve the skill as well. So Wall Street improved the skills, hide behind multiple layers of activities and account and rules or products, try to get the market, muck around the market, and then make you lose money. So those kind of things you need to be careful of. Okay, and that's one of those things. The other things I want to say is, because it's okay, continue with the random event. So if it's random, you have to be careful, in the sense that you could never tell what's coming up next, like what you call Forrest Gump. You never know, a box of chocolate, when you never know what comes next, which is correct, is in my view. And trading is, because it's a random event, you might make the big happens to be on the right place and right time and make a killing. And you can be also on the other side that you make a worse bet and then lose lots of money. And if you have a plan, you can cut yourself out quicker. You don't have a plan and still follow through, like Iran. Remember some of those old guys who have been in those times back in 07, 06, whatever it is, when everybody said Iran is a fantastic company fundamental wise, but the share price going down the drain, and a lot of pension fund managers still stick their head to it because they are fundamentally based, and the fundamental seems good, and they didn't know people are cooking the books, and get frustrated, kind of thing. So this kind of thing could happen, and therefore this is a random event. So if a random event happens, you want to protect yourself, so to speak. So you reduce your size. So trading size, when it's small, also help you as well. And when the trading size increases, you need to remember there's still a random event out there. Can you take the hit? Can you take the drawdown? Can you take the losses? Certain patterns in a row. You need to ask yourself that, but you get better over time. So at the start, be careful of that. You remember everything's random event. And secondly, because it's random, it's not against you. It's not about you. The markets out there do its things. It's not. It sometimes think and looks like the market do this just to screw you up. Screw your mind up, screw your bank account up, whatever. But it's not just go do its stuff. It's you. We as human beings have a certain biases, went into the market and expect certain things to come out, and that expectation is not met, and you think the market is screwing you up. It's not. So at the end of the day, remember, it's random things happening. People can do whatever they want in the market, and it's not really against you. They don't know you, you don't know them. We trade through, especially nowadays, it's everything electronics. You can be in Russia trading a market in Latin America. Who knows? America trading in, I don't know, if North Korea is open, you can trade in North Korea. But you don't actually have to be in North Korea to trade, right? So the market is just going to do its things, and you don't have to, don't get too frustrated. Don't take it personal if the things doesn't happen in the way or time scale that you expecting. So that helps to reduce your frustration as well. The other thing, I talked about expectation already as well, competition. Especially all those A students out there. We are so competitive, whatever we are. Human beings are a competitive bunch. But out there, are you really competing with others? Yes, you are. But stop competing with others, because especially they are not in the same journey as you are. Very much like, athletes. You want to, like, whatever, athletes in the world that, okay, let's say tennis. You want to be like Venus sisters, to be up top of the world and in the tennis school field. But you're only just starting out. Good to aim for that, but got to remember, you compete against others in this case, but it takes time to train up and so forth. But you mainly competing not just with others, but also with yourself. In the market, you don't see your competitors on the other side of the fence, so to speak. But a lot of it is really gone down to, can you complete yourself? Can you actually make yourself do certain things? Things that you don't want to do, like following a plan, writing things down, have enough sleep, eat regularly, don't overtrade, only trade certain time frame, and don't trade when in the middle of the market, so to speak, or make decision while the market is moving down, those kind of thing. And being trend following, we're not day trader, we are trend follower. We try to catch the big trend that happens in months and weeks terms, not nanoseconds. Okay, those are the type of things that we're doing. So you need to think about that kind of thing. Then you basically say, can you do that yourself? You compete yourself, and to make to know you better. So this is what people has been saying. That trading actually bring out who you are. You get what you want. If you are a scary person, you basically you lose loads of money because you're scared losing money, and then you might have some money in the bank, but the market go in your way, but it gone to the mood. However, because you were scared of losing money, you came out of the market or a certain trend much early, and then you lose loads of bunch. For example, Tesla. It's what I said in one of my podcasts is set up to make money certain ways. That's great, but you saying you might have a certain target or scare of making money. You think that's Tesla went up to $400 from $200 already enough. You get out. Well, you didn't know. It went up to $900 something dollars, eight something now, $850 or something at the moment. Those kind of things. So you need to stick with your trading plan. Okay, that's the another thing. Another thing is don't get emotional. If you have a trading plan, you have done your homework in the background. Don't get emotional when with random stuff that's actually happening in the market. And it's just go to whatever it wants. So keep your emotion out of it. And if you're feeling emotion at the time, let's say you have an argument, you have bereavement in the house, your pet die, you didn't pass the exam, whatever it is, and you go into trading because you want to be disciplined. Well, first of all, you can take a time out on that. You don't have to, because remember, trading for us, first rule is basic trade for a long time. And in this one, if you take a few days out, few weeks out, while your emotional state calm down before you trade, that's fine. Or the other way around, like I said before, reduce the trading size. Instead of trading, I don't know, normally you buy 100 share in Apple or something. Don't buy 100, buy 10. Something doesn't really hurt you, but you still keep that discipline to actually make your trading and stuff. So that'll be good to do that. Okay, so when you are emotionally enraged by whatever event, don't trade and get out. Just leave it. The market is going to be there for you. Okay, because the worst thing come to worst is you go and trade while you're emotional. You just forget about your rule, you flunk your rules, and you don't follow your trading plan, and you lose a lot more. You get a lot more frustrated. Okay, that is not what we want to do. Okay, and the other thing is, don't focus on profits and losses. Your P&L account, don't. That's another source of frustration. Yeah, I know we're here to make money. Fine, fair enough. We all want money yesterday, deliver on a platter, golden platter, so to speak. But we know this takes some time. It's gonna it's do its things. I mean, concentrating on your trading plan, for me anyway, it helps me to reduce the thinking towards just concentrating on the profit and losses plan, and then you reduces the kind of frustration, because remember, trading being a random event, you can even follow all the your trading rule has been back tested, followed to the T. You can still make losses. Okay, just like what I said before in some of my podcasts, 1 + 1 does not equate to 2. Certain situation, 1 + 1 means 0 or minus something. If you have a plan and you follow the plan, if that minuses happen, okay, you say -2, that's fine, that's good enough for me. You get out. But gotta remember, 1 + 1 does not always happen. Okay, so remember that one. Okay, and the other thing here is it's quite a big thing as well. It's being a trend follower. I mean, the word trend following is you have to find a trend. That's a trend, and then you follow. Okay, we trend follow. We are trend follower. We don't predict. So we are very unlike the normal type of technical analysis. Here's head and shoulder. He is a blue flag. He's a bear flag. He's report and resistance. No, we don't. We acknowledge that they are like signposts to us, but we have no idea what happened next. So we don't predict. We just follow a rule of rules, say, based on mathematical model, is go in, and you go in. Even though there's a trend line to say there's a ceiling, you better get out, But a lot of time, it happens, it works, okay? But also a lot of times, it doesn't work. The ceiling as if, nothing, like a piece of paper or crisp. You can just, share price just go break through it. And if you always say, okay, that's a ceiling, there's a trend line to stop you getting it, you better get out, and you get out and you're left on the sideline when the share price just go to the moon. You don't. Okay, one of the things about trend following is you follow the trend until it bends. You don't predict, you follow. When there's a trend, you follow, and you follow. And it takes time, okay, but remember, it's trend following. Okay, that will reduce your frustration as well. Okay, yeah, you might have sometimes you say, okay, the trend following, when it hit the, for example, again, ceiling and it come back down, and you lost a bit of money before you actually got stopped out from your system, and you lose a bit of money. You always go back thinking, your emotional brain is telling you, your lizard brain is telling you, you should have get out earlier. You should have got a lot more of those profit, or reduce your losses, whatever it is. Well, I would say, first of all, your losses is already calculated before you go on the market, so you know how much you're losing in a trade, and you're happy with that, fine. So therefore, you go in the trade. And also on the flip side, what happens if the ceiling doesn't work? It's actually there, but there's not enough sell orders, but there's loads of people buying, and then just go through the roof. Remember, look at this bear squeeze in Tesla, just goes straight up. $100. What are you gonna do? Yeah, you want to lose those chances of making those big money? No, you just follow the plan. So following your plan have its own frustration. It generates own frustration when the plan is not making money, like 1 + 1 doesn't equal to 2. But you have to remember that same plan is 1 + 1 can make you lots of money. That is 1 + 1 equals 10. 1 + 1 equals 1,000. It can happen as well. So you got to remember that as well, okay? And the other thing is, I always mentioned earlier, when you're trading, don't make decision during the trading hours, okay? You make your decision at night. That's what I do anyway when everybody's asleep. And you make your cold, hard thinking hat on and make your decision that way, and then next day just follow that trading, whatever you need to buy or sell, or stand aside, do nothing, that kind of thing. Don't try to get too emotional and try to get in the middle of the day and trade your account in the middle of the day when the price is moving up and down. Like I said before, trend follower are not day traders. We don't go up and down, go in like this, and in the middle of the day and trade. We trade long term. We use daily charts. We capture big long chart or long trends, which is, happens weeks and months, sometimes even years, and we want to make those big money. So that's another thing to watch out for, which can help you to remember and reduce your frustration. The other thing, it's not often talked about here, is you are the creator of your own world. So if you're trading world, you're feeling very frustrated, I would suggest you do something about it. Providing you write down these things, your emotional state as well as your trading, when you review and you look at it, like what I say about yearly review, one of the issue is frustration. Well, do something. Set up a plan to trade it that way, or certain way that reduce your frustration, reduce your size, reduce expectation, take a more long-term view, those kind of things. And also maybe sleep more than 7 hours, eat regularly, go exercise at least once a week, that kind of thing, and you then create a trading environment that is conducive for good behavior, good trading behavior. You make it easier to follow trading plan, and therefore your frustration reduces. Remember, you are the creator of your own world. It's not just about trading, it's about everything else in our life. And when you get better in trading, you will find out also you as a person feel better. When you go outside facing the world with other issues as well, you feel better as well. So trading for me is not just about making money. It's also philosophy. It's also in the background also help you improve yourself. And I really believe we are the creator of our own world. So you want better result, first of all, you need to be trained. You need to have a plan. And the other thing I didn't mention is you need to maybe have a mentor who have done this before, or at least podcasts like my one who have done this before may be better as well. Some other more experienced people, listen to them on YouTube, whatever media you can find, and listen to what they have said about how they go break through in their old past downturn. Especially Dario, like Ray Dalio. He lost his loads of money. I mean, you might not like Donald Trump. He lost his loads of money as well, but he came back up again. Okay, those are the type of people you need to follow. Okay, and that gives you, sense of direction, kind of thing. But remember, create an environment that doesn't make you feel frustrated. Okay, that give you strength, that give you peace, that give you the space to think, and then test your data and basically just follow that plan through. Okay, I hope you like this podcast, and I hope it brings some of the pointers up that you think will be useful. And I will speak to you soon. Bye for now.